The market's chugging along quite nicely, 67 higher on the Nifty, and banks and the mid-caps are actually doing even better than the Nifty. Nilesh Shah, MD and CEO of Kotak Mahindra AMC, is joining us to give us his sense of the market and life at all-time highs. Nilesh, thank you very much for joining in. So, I'll start, with the question that everyone's asking. You guys are getting redemption pressure, 13,000 outflow, people are booking profit. What is going on here at this all-time high, and how do you put it all in perspective?
So our investor set is not a homogeneous set, it's a heterogeneous set. On one side, we launched our ESG fund NFO. It became our largest equity NFO. We collected more than 1,450 crores from 49,000 investors. We have seen our SIP book, which has continued to grow, and retail investors, because the average SIP book is about 3,000 rupee, continues to invest. On the other hand, we have seen redemptions from institutional investors, HNIs, and family offices. Maybe they are doing profit booking for the sharp run-up in the market. Maybe they are redeeming money to invest back into their businesses. Of course, there is a small amount of investors who are redeeming from mutual fund, probably to invest directly in the market.
Okay. All right. Yeah, I take your point that there would be some who would be investing. After all, the SIP number is not all that bad, though it is still lower than the 8,000 crore plus. It is still standing at a decent 7,300 crore. So that money is coming in. But, sorry, you were saying something, Nilesh? I couldn't hear.
Last 3 days of November were bank holidays.
Okay.
So that's why November SIP number is down.
Okay.
Hopefully in December it will get averaged.
All right, fine. Then maybe that's one worry less. In any case, those who are not investing are missing out. So it's their worry. But there was reason why we were going to do that Adani group of stocks. There are pockets of excessive valuation. Nilesh, do you think now as we step into the 13,500 plus or the 46,000 on the Sensex, there is scope to think that there are pockets of worry?
Undoubtedly, Lata, globally also, if we see some of the NFOs, they are trading at multiple times their sales. There are companies whose sales have grown probably in lower single digits, and market cap has grown in lower triple digits. The excessive cash chasing certain concepts does create pockets of overvaluation. And as a fund manager, it is our job to invest in businesses which we understand, which are real, and not get lured into this momentum investing. In the short term, it does create pain. You underperform if such kind of stocks are part of benchmark indices or even peers' portfolio. But experience has taught us that if you invest in what you understand and don't chase this kind of excessively valued stocks, after a while, it starts paying you back, and it works well for you in the end.
Okay, got that. Nilesh, hi, good morning. I wanted to discuss this whole PLI theme with you because a slew of companies that we spoke to in the last couple of days, whether it's Amber Enterprises, Poly Medicure, a couple of bigger companies as well, have now decided to put some capex to work, put up greenfield projects in order to benefit from this PLI scheme and the export opportunity. Is there still more to go? And if yes, what are the pockets that you would identify for long-term investors now to play this theme?
So, Sonia, PLI scheme is a fantastic scheme. Earlier, we used to provide incentives to everyone in a democratic manner. Now we are providing incentives to certain sectors for achieving certain objectives. This kind of concentrated incentive does create that huge manufacturing base or sector specialization. We believe in electronics components, contract manufacturing. This PLI scheme can create wonder. However, one will have to be extremely careful in choosing the right company. We have seen time and again that, one set of sectors starts running, When I started my career, granite companies, aquaculture companies, NBFCs. Then in the second phase, we saw media and telecom and technology companies. In 2008, we saw infrastructure companies. Uh, Everything runs up when a wave for a sector comes. Right now, also PLI has become a theme, and every company who says that I'm going to participate in PLI, their stock price is getting re-rated. One will have to be extremely careful in choosing this company. The scheme is good, but your promoter, your management also needs to execute that scheme on the ground.
Okay. Well, Nilesh, you are the perfect advisor for a person like me, Surabhi and Sonia, for the simple reason that we are not allowed to buy stocks anyway. So we have to, participate in this through mutual funds. Now, your competitor, Naren, has launched the Balance Advantage. Do you think now we should go to funds where the fund manager has more freedom to go between debt and equity?
So, Lata, Naren is not my competitor, he is my peer. We have worked together.
Yeah, of course, used to be, yes.
And Balance Advantage Fund is a fantastic product. This is a fund where we divide between debt and equity, looking at the valuation of the market. I have always advocated asset allocation on your shows. And in our Kotak Balance Advantage Fund, on 17th of Jan 2020, at 12,351 Nifty, we were 39% in equity. With the hindsight, it should have been 20%, but 39% is not bad enough. On 27th of March at 7,800 Nifty, we were 75% invested in equity. In the hindsight, it should have been 80%, but 75% is also good enough. And as of today, as we speak, we will be invested around 40% into equity. So over last 9 months, we have seen directionally how to capture the valuation of the market. So Kotak Balance Advantage Fund, kind of Balance Advantage Fund, are appropriate for investors who don't want too much volatility in their stock market return and who wants fund manager to do the asset allocation.
Fair enough, Nilesh, which is why I guess if you're someone who's going to crib and cry saying, why isn't my fund not performing and the market's shooting up to 14,000, then maybe a balanced advantage fund is not for you because the mandate is that it has to, keep allocating cash, debt and equity. So to each his own. But let me talk about the aggressive investor now, Nilesh. First of all, do you think that this is a market that can substantially shoot higher? Because we're getting a lot of macro positive news now. And the big talk is whether we should go back to, infrastructure stocks and cyclical plays and that part of the market, which hasn't moved. Your views?
So undoubtedly, there is a momentum in the market right now with retail investors, foreign portfolio investors continue to buy, whereas domestic institutional investors are on the selling side. My recommendation in this market will be that stick to quality. You may end up losing in the short term, but over a long term, that will pay. Every time investors have tried playing momentum, and every time they have tried to narrow down lower quality stocks valuation with higher quality stocks valuation, eventually that does not work. Though in the short term, it may just work. So my recommendation to investors, please stick to quality. They are expensive, they are not cheap. But at least quality stocks, real businesses will protect your money. They will eventually grow your money, maybe at a slightly lower rate, may not be at a faster pace, but quality always pays.
Okay, well, the market is definitely on fire right now, still holding on to its gains. But Nilesh, at what stage of the metal upcycle are we in right now? Because, some of these stocks have almost doubled. Tata Steel, for example, has almost doubled in the last 3-4 months. Demand is good, prices are higher. Do you think this is the start of an upcycle in commodities, especially base metals? And is this a wave that you would ride?
So on the commodity side, there are conflicting reports. On one side, there are certain global metal analysts who are talking about a bull run in commodities across the board. They feel the capacities are constrained, demand has recovered, and metal prices and other commodity prices will continue to rise. Not many have noticed, but oil prices have also started moving up, which could be a cause of worry for India, though at this stage it is not that big a worry. On the other hand, we have seen that commodities are always cyclical, and when prices go up, dormant capacity also starts coming into play. We also don't know what's going to happen in China. Generally, we have seen that when they want to buy, they spread the rumor as if they are not going to buy, pull the prices down, and then clean sweep it. So my opinion on commodity stocks is that, you have to buy when commodity prices are down and sell when commodity prices are rising. It's better to play contra on commodity stocks rather than a, long-term investor into commodity stocks.
Well, at least at the moment, it's helping them deleverage in India. Nilesh, a final question to you about ESG. Do you think it'll be wise for investors now to move towards ESG funds because that's where the big global money appears to be going? I mean, ITC can be available for fantastic valuations, but it's not convincing the ESG guys.
Undoubtedly, Lata, my feeling is that eventually all investments will move toward ESG. It is not a thing, it is a movement for trying to make better tomorrow. Now, this is a big statement and we are all small people, but we all have to make small contributions in developing, creating better tomorrow. If we can ask our portfolio of companies about how they are contributing to environment protection, how they are maintaining corporate governance standards, how they are improving contribution to social community around them, these are all steps in the right direction. It's not a miracle, it's a movement. It will gradually pick up the pace. And more importantly, ESG is not a new thing. I mean, someone like House of Tatas, when they started their cotton textile mill in Nagpur, they provided crash for the female workers, even though that was not the law. They provided pension fund and provident fund to their workers in Jamshedpur before such things become a law. So it's not that ESG is a new concept. For successful businesses, it was always part and parcel of their business requirement, their business principles. Now it is getting formalized, and ESG will become extremely important over a period of time. And we are one of the first AMC in India who have signed for United Nations of Principle Responsible Investing, and all funds are geared for ESG investment.
Point.
Okay.
Nilesh, pleasure hearing you out on this. In fact, your former boss, Mark Mobius's book, I mean, when what is that? Invest for Good, a Healthier World and a Wealthier You or something. At that time, he said, we as mutual funds are now going to sit as, shareholder rights. So we can't be only looking at valuations. We have to exercise our rights as shareholders and ensure that companies behave responsibly. It's an excellent book. Thank you very much for pointing out where the broad trend is moving, and it's moving in the right direction. While we were speaking with Nilesh, of course, the market hit all-time highs yet again, 13,550 crores.
Okay, I'm going to take over from Lata so she can catch a breath. The market continues to actually hold fairly well, 72 points higher on the Nifty. It's really climbing over. You should pull up the intraday graph and it'll show you the trend. Mid-caps are doing well as well. Good time to take a break. We will touch base with one more management. Matthew Job, CEO at Crompton Consumer, is going to talk to us about how their business is shaping up, different lines, and of course their take on the PLI scheme for white goods.